We get a healthy dose of economic data on Friday, but there are plenty of other things going on that will also have an impact on market direction and volatility. Global trade tension has been a big one, while German politics, the EU summit, and updates relating to Brexit are some of the others. Risk markets have been looking increasingly vulnerable in the current backdrop, and when you throw in month-end, quarter-end flow, Friday could very well easily shape up to be a wild one on the final day of trade for the first half of the year. If we look at the developed currencies and their performance against the US dollar in the first half of 2018, it's clear US administration protectionism designed to weaken the US dollar wasn't all that effective. The combination of favorable US dollar yield differentials on Fed policy normalization calling for a fourth hike in 2018 and the emergence of flight to safety demand have managed to offset dollar bearishness from the US protectionism. Only the yen was stronger than the buck in the first half of 2018, up about 2% over this time frame, while the rest of the developed currencies were lower. Market sensitivity to less favorable conditions was also very clear, with the major currencies outperforming relative to the more risk-correlated commodity block currencies, despite weakness against the buck. The Swiss franc is down 2.35% in the first half of 2018. The pound is down 3.2% in the first half of 2018, and the euro is down 3.6% in the first half of 2018. This compares to Kiwi, CAD, and Aussie down roughly in the 5 to 6% range in the first half of 2018. As we look out into the second half of the year, it will be interesting to see if the dollar can build on these gains or if the buck will start to roll back over as the U.S. administration pushes forward with its agenda. Whatever the case, with U.S. equities looking vulnerable off record highs and very much due for a major pullback, we expect there to be continued underperformance in the risk-correlated commodity block and emerging market currencies. As far as today's dose of data goes, key standouts come in the form of German retail sales, UK GDP, Eurozone CPI, Canada GDP, US core PCE, US Michigan confidence, and the Bank of Canada Business Outlook Survey. That's all for now.